Elon is 20 years old. He's single, ambitious, and like a lot of young people, he's been thinking about money more seriously lately. Elon doesn't come from wealth. He doesn't have thousands of dollars sitting in a brokerage account. What he does have is curiosity and a simple question. What if I start small and stay consistent? One night, scrolling through his phone, Elon stumbles across Apple stock, ticker symbol AAPL. He's used Apple products his whole life, an iPhone in his pocket, AirPods in his ears, maybe even a MacBook for school or work. That's when the idea hits him. What if I invested just $25 a week into Apple stock? It doesn't sound impressive. $25 is less than a dinner out, less than a tank of gas, less than most people spend on subscriptions every month. But Elon is about to learn something powerful. Small money, invested consistently, over a long period of time, can grow into something life-changing. This video is the story of Elon, and the math behind what investing $25 a week into AAPL could really turn into over. Before we go any further, here's an important disclaimer. This video is for educational and informational purposes only and should not be considered financial advice. I am not a financial advisor. The examples and opinions shared in this video are based on personal research and experience. Investing involves risk, and past performance does not guarantee future results. Always do your own research, or consult with a licensed financial professional before making any investment decisions. Now that that's clear, let's continue Elon's story. AAPL is the stock ticker symbol for Apple Inc. Apple is one of the largest and most influential companies in the world. It designs and sells iPhones, iPads, MacBooks, Apple Watches, and runs services like the App Store, Apple Music, and iCloud. What makes Apple important to investors is scale and consistency. Apple has a global customer base and strong brand loyalty. With massive cash flow and a history of innovation, Apple isn't just a tech company, it's a core part of the global economy. Unlike small startups, Apple isn't trying to survive, it's trying to expand and dominate. For Elon, this matters because he's not looking to gamble. He wants a company that has already proven it can grow over time. Apple is more than hardware, it's a foundation of the modern digital landscape. Now, let's take a closer look at how Apple's financial ecosystem really works. Why people invest in AAPL. Elon starts digging deeper and notices something interesting. Many long-term investors hold Apple as a core position in their portfolios. Why? First, Apple has historically delivered strong long-term growth. Second, it continuously reinvests in new products and services. Third, it returns value to shareholders through stock buybacks and dividends. Apple isn't trying to get rich overnight, and neither is Elon. This aligns perfectly with Elon's mindset. Invest consistently, hold long-term, let time do the heavy lifting. Instead of chasing hype stocks, Elon chooses stability paired with growth. AAPL growth rate. Now, Elon looks at Apple's historical growth. Here's what he finds. 3-year growth rate, 22.21%. 5-year growth rate, 15.1%. 10-year growth rate, 28.4%. What do these numbers mean? They show how Apple has grown on average per year over different time periods. The key takeaway for Elon isn't the exact percentage, it's the pattern. Over long periods of time, Apple has rewarded patient investors. This is important because Elon is only 20 years old. Time is his biggest advantage. How does Apple compare to the S&P 500? Let's dive into the math of investing. The S&P 500 represents the top 500 companies in the US stock market. Historically, the S&P 500 has returned about 8% to 10% per year over long periods. Apple, over many stretches, has outperformed the S&P 500. That doesn't mean it always will, but it shows why many investors choose Apple instead of or in addition to index funds. For Elon, this comparison helps him understand opportunity cost. If Apple grows faster than the market, his small weekly investment could compound much more aggressively. Elon realizes something important. Investing $25 a week doesn't feel like much, but over time, it adds up. Here's the raw math. 1 year is $1,300, 5 years is $6,500, and 10 years reaches $13,000. At 15 years, it's $19,500, 20 years is $26,000, and 25 years hits $32,500. And at 30 years, that's $39,000. That's Elon's total contribution, not counting growth. The shocking part isn't the money invested, it's what the money could become. $25 a week investment scenario. Elon decides to start with the simplest plan possible. No lump sum, no market timing, no trying to guess when Apple stock is cheap. Just $25 every single week automatically invested into AAPL. That means Elon is practicing dollar cost averaging, buying consistently whether the market is up or down. Over 1 year, Elon contributes $1,300. That's it, nothing fancy. But the real magic happens when time and compounding take over. Let's walk through this slowly. After 5 years, Elon has personally invested $6,525 of his own money. Thanks to Apple's historical growth, that money grows to $9,655. Already, his investment has grown by more than $3,000 without him doing anything extra. At 10 years, Elon has invested $13,025 total, but the value of his account is now $48,381. Notice something important here. His money didn't just double, it nearly quadrupled. This is where compounding starts to become noticeable. By 15 years, Elon's total contribution is $19,525, but his investment value has grown to $136,109. At this point, his growth is far larger than the money he personally put in. Now let's fast forward. At 20 years, Elon has invested $26,025, but his portfolio is worth $516,288. That's over $500,000 from just $25 a week. By 25 years, Elon has invested $32,525, and his investment grows to $4,243,141. This is where compounding truly explodes. And finally, at 30 years, Elon has invested only $39,025 of his own money, but his portfolio value reaches $10,449,781. Let that sink in. Less than $40,000 invested over 30 years, growing into over $10 million simply by staying consistent and letting time work. This is why starting early matters. This is why patience beats luck. And this is why $25 a week is not small, it's powerful. After a few years of working and learning more about money, Elon realizes something important. He can afford to invest more. Instead of $25 a week, Elon decides to double his commitment and invest $50 every single week into AAPL. That's $50 whether the market is up, down, or flat. No guessing, no emotional decisions. By doing this, Elon's yearly contribution becomes $2,600. At first, it still feels manageable. Now let's look at what happens over time. After 5 years, Elon has invested a total of $13,050. Thanks to Apple's growth, that investment grows to $19,311. By 10 years, Elon has invested $26,050, but his portfolio value has grown to $96,762. This is a major turning point. Elon has put in just over $26,000, yet his investment is now worth nearly 4 times more. At 15 years, his portfolio has grown to $272,219. At 20 years, Elon has invested $52,050, but his account value climbs to $1,032,577. This is Elon's first millionaire moment. And remember, this didn't come from a high salary or lucky timing. It came from consistency. By 25 years, his portfolio grows to $8,486,282. Compounding has taken over. Finally, at 30 years, Elon has invested $78,050 of his own money. His investment value reaches $20,899,563. More than $20 million from a $50 a week habit. Trust the process, and the numbers will reward you. As Elon grows older and more disciplined with money, his income increases. Instead of upgrading his lifestyle, Elon makes a different decision. He chooses to double down on investing. Now Elon commits to investing $100 every single week into AAPL. That means his yearly contribution becomes $5,200. At first, this feels like a serious commitment, but Elon understands that this money isn't being spent. It's being transferred into his future. Let's look at what happens over time. After 5 years, Elon has invested $26,100 of his own money. Thanks to Apple's historical growth, that investment grows to $38,623. Already, his portfolio is doing more work than he is. At 10 years, Elon has invested $52,100 total, But his investment value has grown to $193,524. This is where things start to feel real. His portfolio is now worth nearly 4 times what he personally put in. By 15 years, Elon's total contribution reaches $78,100, but his investment has grown to $544,439. At this point, growth becomes the main driver, not new money. At 20 years, Elon has invested $104,100, and his portfolio is now worth $2,065,155. Elon is officially a multi-millionaire. By 25 years, Elon has invested $130,100 total. His investment grows to $16,972,565. And finally, at 30 years, Elon has invested $156,100 of his own money. His portfolio value reaches $41,799,127. All from a simple habit: $100 a week. Consistency. Time. Invest in your future today. Later in life, Elon reaches a point where investing feels natural. It's no longer something he thinks about, it's automatic. Elon decides to increase his investment to $150 a week into AAPL. That makes his yearly contribution $7,800. This isn't about sacrifice anymore, it's about focus. Here's how the numbers play out. After 5 years, Elon has invested $39,150. That investment grows to $57,935. At 10 years, Elon has invested $78,150, and his portfolio grows to $290,287. This is where momentum becomes obvious. At 15 years, Elon has contributed $117,150, but his investment value has reached $816,659. Most people never experience this level of compounding, but Elon stays patient. At 20 years, Elon has invested $156,150, and his portfolio grows to $3,097,733. By 25 years, Elon's total investment reaches $195,150, and his portfolio explodes to $25,458,847. Finally, at 30 years, Elon has invested $234,150. His investment value reaches $62,698,691. Not because he chased risk, not because he timed the market, but because he stayed consistent for decades. $200 a week investment scenario. At this point in Elon's journey, investing is part of his identity. He understands the math. He trusts the process. Elon now commits to investing $200 every single week into AAPL. That means his yearly contribution becomes $10,400. Let's see how this long-term discipline plays out. After 5 years, Elon has invested $52,200. That grows to $77,247. By 10 years, Elon has invested $104,200, and his portfolio grows to $387,049. At 15 years, Elon's total contribution is $156,200, while his investment value reaches $1,088,879. Now the compounding engine is fully running. At 20 years, Elon has invested $208,200, and his portfolio grows to $4,130,311. By 25 years, Elon has invested $260,200, and his investment explodes to $33,945,130. Finally, at 30 years, Elon has invested $312,200 of his own money. His portfolio value reaches $83,598,255. This is what happens when long-term thinking meets consistency. Same stock, same strategy, just more fuel added to the fire. Elon's journey shows one simple truth. How much you invest each week matters, but how long you invest matters even more. Starting with small weekly contributions and staying consistent over decades creates exponential growth. Let's break it down. At $25 per week, Elon's investment grows steadily at first, then explodes over time. 5 years, $9,656. 10 years, $48,381. 15 years, $136,110. 20 years, $516,289. And then it hits the millions. 25 years, $4,243,141. 30 years, $10,449,782. This habit becomes life-changing. This proves that even the smallest habit can become life-changing with time. Now, let's double it. At $50 per week, doubling the contribution more than doubles the outcome. This is where it gets interesting. This is where millionaire status becomes realistic for disciplined investors. Now look at $100 per week. At $100 per week, now compounding takes full control. The numbers scale rapidly. 5 years, $38,624. 10 years, $193,525. 15 years, $544,440. We are crossing $500,000 early on. 20 years, $2,065,156. 25 years, $16,972,565. 30 years, $41,799,128. Absolute financial freedom. Elon becomes financially free long before retirement age. But what if you could do more? At $150 to $300 per week, results accelerate to $62 million, $83 million, $104 million, and even $125 million at 30 years. Same stock, same strategy, just more consistency and time. That's the secret. Final takeaway. You don't need to start big, you need to start early. Consistency beats timing. Time is the real wealth multiplier. Whether it's $25 or $300 a week, the most important step is starting and staying invested for the heavy lifting. Elon realizes something most people never do. You don't need to be rich to start investing. You need to be consistent and patient. In the next video, we'll explore ETFs like QQQ, SPY, and more, comparing which ones help you build wealth. If you enjoyed this, please like and subscribe so you don't miss what's coming next. Thank you for watching.